I'm Alex Pugh. I'm reporting for FinTech Futures at Sibos 2022. I am with Tod Burwell. He is the President and CEO of the Bankers Association for Finance and Trade. Our first question is, the relationship between fintechs and banks used to be seen as somewhat adversarial. What's your take on the current state of that relationship today?
So I would say that is so 1980s.
Okay.
I genuinely, our association has both banks and non-banks as members. And the reason for that is because we view it as an ecosystem. I think many of our members, particularly because they're involved in businesses that require some of the expertise that fintechs can bring, have gotten to the point where they're really just looking at the organization's capabilities and can they help the banks deliver to their clients in a more effective way. So it is all about collaboration at this point in time.
Right.
I think that there's clearly some instances where some fintechs may be taking certain market share away around segments of the banking industry, but by and large, I think they each need each other.
Yeah, teamwork makes the dream work.
Yeah.
So I was going to ask, which are there sectors that get on better with each other than others? You mentioned that in some areas, fintechs are stepping on the toes of banks a little bit, but are there areas where that's the case, or also areas where they do really get on quite well?
Well, I think it's less about stepping on toes, and it's more about readiness. So certainly we've seen many of the large global banks who have pools of investment available to them. They're in the space in a lot of different ways. Some of them have stood up their sandboxes and their labs, and they're investing in fintech companies to help develop them. Some of them are then spinning them off to be their own independent companies. They're bringing some of them in-house. So the large institutions are well up the curve in terms of their relationships with fintechs. In fact, we had a program on Sunday, which is a thought leadership program that we do every year before Sibos. And one of the topics was fintech banking. Now, the thesis behind that was there are some institutions that believe banks need to think about the fintech segment differently than the way that they bank other segments. And they have to unlearn some of the behaviors that they have for other segments. So I think if you were to look at the banks, I'd say the large banks really have embraced fintech collaboration and they've taken it to another level. Some of the smaller, more local banks, depending on the geography, may find themselves in competition with certain fintechs in many cases. And so there may be a little bit more learning that has to happen at that level for how they can work together.
Right. What areas do you think are ripe for collaboration between fintechs and banks?
So the biggest word I always hear is interoperability. I think the thing that we have seen through COVID and even pre-COVID is that there's a lot of digital solutions that are being introduced, but that creates a lot of digital islands.
Silos.
And what needs to happen is there needs to be interchangeability of data from one digital island to another. And it needs to be done through quick interface, through APIs that are easy to implement. And so that's one of the first areas. From a practical area, I think banks are continuing to try to fight elements of financial crime and fraud. That seems to be clearly an area of opportunity. I think there's always opportunities to find a way to do credit analysis better, faster, richer, more comprehensively. And I think one of the other areas is just with client onboarding. For a lot of the products that we see rolled out, one of the biggest hurdles is how do you get to scale? And getting to scale takes a lot of manpower, a lot of time, a lot of resources. There are likely ways that fintechs can help accelerate that and also reach pockets of the market that some of the banks may have difficulty getting to.
So you mentioned financial crime there. What ways are banks and fintechs working together to address fraud and financial crime?
So I'm sure that there's many that I'm not thinking of, but one of the ones that comes to mind is when banks looked at certain segments of their business, those segments were kind of classified broad brush as being high risk. That means every one of their clients in that segment generally will have to go through an enhanced level of due diligence, scrutiny, servicing, etc. What we have heard is that working with some companies using different types of AI solutions and other intelligence solutions, they've been able to find ways to identify the slivers of that entire segment that they really need to focus their attention on.
Right.
It makes them much more efficient, it makes them much more focused, it makes them much more effective in trying to deliver across the entire segment. That's one way. We've heard many organizations that are working with fintechs to do predictive fraud analysis and things of that nature. And you know, of course, the more we become digital, the faster fraud becomes. So I think there's going to be a huge opportunity for banks and fintechs to continue to enhance whatever fraud detection and fraud mitigation programs they've already got.
Yeah. Do you feel that calls for tighter standards and regulations more often come from fintechs or from banks?
Banks.
Banks.
Yeah. So I think, and this is something that's actually, it's a central topic that we're trying to address right now. In many jurisdictions, regulation is really based off of charter of the institution rather than the activity that's being performed.
Right.
And that's, quite frankly, of concern in particular to the banks, because the banks are very heavily regulated. In some jurisdictions, fintechs are seen by the government as a vehicle to achieving a certain level of financial inclusion. So the regulatory framework and oversight may be a little bit lighter, right? Yeah. And that's intentional to some degree because they're trying to help fill another gap in that particular market. At the end of the day, if the settlement of those transactions has to happen through a bank or bank rails, then the bank still has the burden to do a lot of the compliance protocols that fintech might not. And that creates a level of friction. So the banks then put themselves in the position of being regulators, which is not the most value-added relationship. Yeah. So I think the banks would like to see regulation based on the activity. Now, what I will say is what we've seen with fintech companies is that there's sort of a maturity curve. And the higher up the maturity curve the organization is, the more the fintech company embraces what needs to be done from a regulatory standpoint. That's what helps them scale. And that's what helps them integrate with banks and achieve enough ubiquity. So the earlier in their cycle, fintechs actually embrace the regulatory oversight that's going to be required, the quicker they can get up that curve and achieve better adoption.
So it's for their own good.
Yes. And some use it as a competitive advantage, to be quite honest with you.
Can you give a couple of examples where fintechs and banks have partnered and it's been a success in your view?
So I have to be careful because I serve many members and I don't want to pick any favorites.
Okay.
I'll get in trouble, but I'll talk about a couple of thematic examples. I gave you one in the financial crime space using artificial intelligence and predictive fraud measures. Those have delivered real business results. And ultimately, that's what proves the case. I think in the trade space, we've started to see more instances in supply chain finance, for example, where using certain technology can help allow for capital to flow deeper into the supply chain, if you will. Yeah. It's also helped accelerate some of the onboarding of second tier, third tier, fourth tier suppliers. And that helps to close some of the financing gap. We think that there's got to be probably dozens of examples where embedded finance has not only enhanced capabilities that banks can offer, but it's helped accelerate what they can offer in certain instances.
Well, on that note, that's everything for us. Thank you so much.
Good, thank you.
Cheers, mate.
Okay.